You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade, Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the vol world? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Man, what a wild week it's been on the network. Yet another reason for you to be subscribed to the full network. Usually 3 shows coming at you a day, if not more. So wild stuff out there. And of course, every day you're getting your flavor. You're sprinkling your cherry on top. That is the Hot Options Report, a.k.a. Thor. So that'll be coming at you at the end of the day today as well. All sorts of fun. So again, if you're just listening to Vol Views, man, you are missing out, including missing out on the Pro. We went deep on Vol this week on the Pro Q&A with our good buddy, Mr. Scott Nations, who's been on this show many times. We talk volley all the time. He went deep tackling your Vol questions. He also may have picked a Vol fight with the Flowmaster. We may have our Vol Deathmatch 2.0. Flowmaster versus Scott Nation. Seems like Flowmaster was in there. They were having some fun. So we shall see. Might be setting up for another entry into the arena. 2 men enter the volatility arena. Only one can leave. So look forward to that coming sometime soon. Should be a good time. As we go around the horn, see who's joining us for a good time on the show today. First, let's go out to the Southern Volatility Mecca, known as Austin, where we are joined once again by the greasiest of meatballs. He has to put down his meatball sub just to join the show. None other than Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, how are things in the Southern Vol Mecca, sir?
Oh, lovely. It is absolutely lovely. Blue skies, 90 degrees. Perfect fall day in Austin, Texas.
I was just talking to your buddy, Mr. Magadini from Amberdale. He says he's going to come to Austin one of these days and roust you out of your Southern Vol Mecca.
That's what he said. He keeps threatening to come visit me. I'd love to hang out with him.
He says he wants to have some brisket and meet the Undertaker with you. I said, well, you're going to the right place. There you go.
Yeah, absolutely.
your new best buddy, your neighbor, the Undertaker, right?
I don't think he lives in Circle C. I'm going to guess he's out.
He doesn't live in Austin proper.
Springs.
That makes sense. He probably has like the Taker Ranch or something, some big estate full of coffins and caskets and all sorts of fun.
What he should do is have like a private graveyard, and you pay like a boatload of money and you get and the taker will actually undertake you.
There you go. See, now you're thinking a few steps ahead there. Taker not quite on that level yet, but good stuff. I missed our fun 80s and adjacent wrestling conversations on the option block out there. We don't get much of those anymore. And speaking of 80s wrestling, we are joined by the son of Dusty Rhoads himself, Mr. Dr. VIX, a.k.a. Mr. Russell Rhoads, corrupting young minds at the University of Indiana. Mr. Rhoads, welcome back to the show, sir.
Hey, very, very happy to be here. I love being the American dream of volatility. That's exactly. And I've got a great wrestling idea twist for one of the death matches. And Mark and Andrew.
I'm intrigued.
You know, like when they do the random draw and tag team partners suddenly have to go against each other.
It's the Royal Rumble.
Yeah.
It's Demolition 1 and 2 all over again.
Yeah. Andrew's got about 6 inches on me, so this would not be a great fight.
Yeah, but you're fast and you're crafty.
And he has only one eye, so you can stay on the other eye and you're good.
You could sneak up on him.
Yeah, there you go. There's a lot of ways. You can.
If I poke him in his one eye, he can't see.
There you go. Just take out the other eye, and it's all downhill from there. But you know what, listeners? It's all uphill from here as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week's worth of vol action. And coming into the start of the show, we're kind of meandering into the end of the week. After a week that had some fits and starts out there, coming into the start of the show today, the S&P is pretty much literally unched. NASDAQ up about 0.4%. The Dow in the other direction about 0.4%. And good old VIX cash hanging out at a 14.5. Yes, listeners, we are shy of that 15 handle and heading lower. So all sorts of wild stuff. They are just taking vol to the woodshed yet again. An interesting week out there, of course. We saw CPI numbers coming in hot, but pretty much as hot as expected. So that didn't really spook folks. The unemployment side, the labor side really seems to be cementing the deal in terms of the Fed probably going to cut rates. I mean, the Fed watch is about as certain as I think I've ever seen it, 100% of a cut coming next week, which means when they throw a curveball, it's going to be pretty wild. I'm just joking, listeners. But all sorts of fun out there on the vol side this week. Let's go around the horn. Let's break it down. Let's start with the greasiest of meatballs. Mr. Meatball, sir, an interesting week on the vol front. What was catching your eye, sir?
Yeah, I just caught this today. I'm a little surprised how inexpensive bond vol is going into this event. There is a lot on the table. No, we're not worried about September. September is definitely going to happen. In fact, they've got about a 7.5% chance that maybe we get 2 rate cuts. That's not going to happen. But what's really on the table is the fact that they're pricing in near certainty of a second rate cut in October and near certainty of a third rate cut in December. How does that shake out after the meeting? Is Powell going to come out and be dovish? Is he going to be hawkish? I was looking at really tight strangles and straddles for like TLT and IEF, and they just look stupidly inexpensive, especially given the realized volatility we've seen in the bond market over the last week. Bonds are moving. I got logged out of live vol. Darn you, live vol. Just kidding. I'd be like blind without live vol at this point. All right. But you look at like TLT and the implied volatility on those options for next week is like 11. And the ATR over the last 10 days is 71 cents. Doesn't sound like a lot, but when you kind of annualize that and turn it into a volatility, I'm going to give you that number right now. It's, you're 13%. And so there's some movement, and really since the last vol views was on the 5th, and the previous day, the 4th, TLT was $87. It peaked out at almost 91. So there's a lot of movement there. The options are inexpensive, and there's a lot on the plate for the Fed. So that's kind of the out of left field volatility I'm watching this week.
It's funny you mentioned that, because we were just talking about rates vol yesterday on our TWIFO program. You like TLT? We were looking at the rates options, and if you want people are always complaining there's not a lot of good measures for bond vol. You can run it over there on the CVol listener. Just go to type CME and CVol into any browser you got. You'll get that CVol dashboard. You can just go to the rates complex or look at the aggregates like we were doing yesterday, and that will show you this as well. But the Treasury complex, not known to be a bastion of volatility. It's usually hanging out at around a 6 to a 7, but it came in nearly a full point this past week. It went from nearly about a 6 to almost about a 5 on the price vol this week. So that's a big drubbing in the world of Treasury vol. Also kind of interesting because obviously we haven't heard the number yet. So, they're priced. I get it. It's priced like it's 100% certainty, which it is. But you know me, I'm always reticent to crush the vol that aggressively before we've seen this play out before. Remember the whole, Brexit? That was a done deal, not going to happen. Then it did. And the 2016 election, it was in the bag for Hillary until it wasn't. So we've seen this movie play out before. And the fact that the rates folks are so willing to just take vol to the woodshed way before the meeting, I find that kind of odd. You find that kind of odd, Mark?
I do. The move index is 75. That is a 1-year low. And if you go out to even going out to 5-year, the move has not been as low as it currently is since 2022. So now before that, it was much lower. So maybe we're entering a new kind of bond vol regime here. But these options seem pretty cheap, given we've seen Powell throw cold water on a lot of dovishness, haven't we?
We have. Yes, we have. Yes, totally. He could easily add some comments or do something next week that just ratchets this all. That's why I'm saying, and people are just taking this to the woodshed like there's no other shoe left to drop out there. And there could easily be a couple of shoes out there. He might, just to spite Trump, he might throw an extra wrinkle in. That would be kind of interesting. Mr. Rhoads, what are your thoughts? First off, on our bond vol minute, what are your thoughts here on just taking rates vol to the woodshed like there's not a Fed meeting next week? And then B, what else is catching your eye in the vol landscape, sir?
VIX ain't acting like there's a Fed meeting next week.
That's true.
So,
That's true. VIX is not acting like it.
Expect anything else.
What Fed meeting?
Nobody is acting like. We might be getting into a Mark Sebastian Russell Rhoads death match here. The issue with the longer dated bond vol is those odds haven't changed at all. That really is what you're seeing there. And on Bloomberg, you can go a lot farther out than that other tool that's on the internet. We've got numbers going out to 2028 on Bloomberg now with respect to estimated. They just added all of 2027 and early 2028, and it is a straight line 2.9 to 3% estimate of rates bottoming out farther out at that time. And the curve, the funny looking yield curve that we've had has had the dip with the 3-year rate on that curve for some time as well. And all of that kind of matches up. The only thing that really changed over the past couple of weeks was going from 2 cuts to 3 cuts in this year. But we had 3 cuts being priced in by the January meeting anyway. So it just sped some things up a bit. The shoe to drop thing, as far as beyond Powell, I think the last shoes that could have dropped this week with PPI and CPI, and that's why we are where we are. I'm genuinely surprised at the PPI number. I think a lot of people were. But so that solidified what we're going to get. The odds for those 3 meetings on the Bloomberg are basically the same. We're basically, the first thing that I wrote down to mention was the Fed's odds are basically where they were this time last week. We're a little bit lower in VIX, but basically exactly where we were this time last week. So not a whole lot changed with the odds of something happening didn't go up. They didn't go down with the PPI or the CPI numbers. So it's like the longest anticipated rate cut ever and the least surprising, maybe.
Yeah. How long have they been rallying in anticipation of this rate cut, right?
Powell is not a shock and awe Fed chairman, is he? There are some that are like that really, like to try and goose the market, et cetera. And he just definitely is not one of those guys.
But you're right, an odd dissonance this week between PPI and CPI as well. PPI coming in maybe not as hot as expected, and then CPI still kind of hot. So interesting how one side of the economy is showing different signs than the other. But I got so excited at the top of the show, listeners. I mentioned VIX Cash, but I didn't run through the rest of our vol gamut to start the week. So we should say end the week. So we're going to do that now. VIX Cash 14.5. That puts us down 1.5 points, obviously, from where we were this time last week. So again, no, what Fed meeting? A volley 1160. That's our old pal, Mr. Nations, who might be in the next vol death match as well. Down nearly a full point, 0.9. That's, of course, the just the facts, ma'am, vol. So stripping out all your skew. If you don't like that kind of thing, volley is there for you. And then the interesting side, VVIX, all this talk about vol getting taken to the woodshed. VVIX remaining stubbornly persistent at a 95. So that is unchanged on the week. A fact that I think it was Ewan on the show a few weeks ago pointed out that as long as that number stays stubborn, it's going to be interesting out there for those of you out there maybe looking for deals on the premium side or to the downside out there in vol and coming back saying, wow, these things are still pricier than I thought. Well, that's one of the reasons why. Getting out to the vol surface, listeners, what is lighting it up on the vol surface this week? Coming into the start of the show, surprise, surprise, things are down. Like I said, that cash hanging out sub 15 handle right now. We've got that front set future, though, as we kicked off the show, right at about a 15.5 exactly. So kind of interesting watching that develop out there, that bit of, shall we say, differential in the SEP. And we were talking about this on the show last week with Russell as well. SEP obviously going the way of the dodo the day of the Fed meeting, which is why we have this odd bit of dissonance between October and September, because October obviously pricing in all that good Fed juice at about a 17.85. That SEP future at a 15.5. So again, 2.35 points between September and October. That's a healthy amount, and you can point that to a lot of the Fed. Of course, on the week, the AUG contract is gone down the way of the dodo here, listeners, and we've got SEP off about 1.35 points on September, and the October down about a little over a point, about 1.15 points out there. And if we go all the way out now, obviously we're lower on the term structure. So if we go all the way out to, let's say, April or May of next year, we're no longer hanging out at a 22. We're hanging out right around a 21.5. So it's still an impressive slope all the way out there from September at a 15.5 to a 21.5 in early next year. Mr. Meatball, sir, a lot going on the vol surface these days. What is catching your eye?
As you said, there's a decent spread given how little time there is to expiration, but I think it's directly Fed related. October looks really expensive given where, what could happen. Now, October is traditionally a pretty active month, but, VIX is below 14.5, and that October future is almost $18. I was looking, you can buy like the 16 puts in October for like 70 cents. Those would, if we expired here today, they'd be worth $1.51. Pretty decent risk reward there. Now, obviously, VIX could blow up and those would lose, but just kind of given the odds, it's a pretty interesting little play. Those October puts, I did kind of the same thing in September. I was long the 18 puts for most of the month, and those paid really nicely. They can keep that spread as wide as they want, but they eventually do have to meet. Eventually, it can take a while. So I don't hate the October short October, and November looks a little juiced as well. And December is not, as Russell's going to say in a second, December is not as dipped as it normally is. And I'll be interested to see what his thoughts are on that, besides that Fed meeting, which I don't think should be affecting it.
Mr. Rhoads, sir, you were talking about calendars that were catching your eye on the vol surface last week. Did you put any of those on, and what is catching your eye this week, sir?
I did. I bought SEP and sold OC. I still got it, and I am down a whopping 15 cents. The spread between the two was 220 last week, and I believe what you were referring to is I was saying, if you think we're going to have some sort of a spike in volatility this coming week, and I was talking about PPI and CPI, that maybe a trade that would have made sense would have been buying September and shorting October. And the spread's around 235 now. I basically got sold. 220 was my entry price. I'm not 100% sure what I'm sitting around waiting for right now, but I probably should be out of it because the reason I put it on is past us. If I had and I lost money on it, but I'm going to take a small win on this one, because if I had just bought the September future for the week, thinking that we might get a vol spike, I'd be down $1.30. So October helped me out a bit.
I was going to say, one of these is faring a little better than the other. What about Mark's point about December seasonality? Anything catching your eye?
Oh, I forgot. We addressed that, and I can't remember what it was timing wise. I feel like Ewan or somebody had a thought behind that, and I can't remember what it was.
I thought it was. Was it the Fed, or was it?
Is that about when we might start getting who's going to be the new Fed chief? Announcements around it or something?
What we're talking about is Powell's term ends, I think, in December.
Okay. Is that his last meeting?
Either December or January, something like that. So we're going to get a new Fed chair nominee. I got my eyes on.
And I am, and just to loop back for a second to the rate talk, and this is probably the most we've ever talked about rates on this program.
It is.
But I think part of the nothing going on right now on longer term rates is because you don't know who the Fed chair is going to be. You know, it's like, I'm not doing crap until I find out.
The December 9th through 10th is when the December meeting is, and that's what we were talking about. You're right. I think it was with Ewan about how that's obviously what's kind of holding things up on that December cycle there, listeners. Maybe after the 10th we'll know, and maybe the vol will crash to its usual seasonal nadir, but not happening right now. Speaking of things that are happening, listeners, as we've been talking here, getting into VIX options, it looked like it was going to be kind of a snooze fest right as we started the show. Not much on the tape, and now as we're talking, we're starting to threaten 750,000 contracts. So seems like VIX is starting to perk up out here. 710 on the tape right now, listeners. So well on the way to hitting their ADV of 877, which in and of itself has exploded up about 80,000 contracts from this time last week. So VIX options starting to get a little spicy out there, which is good to see, because yesterday, this time on option block, we had about 500,000 contracts on the tape, and it seemed like things were popping off. And then VIX just went to die and did nothing else the rest of the day. So we'll see. Today, it seems like it's perking up. So hopefully that trend will continue. What's popping off in the land of VIX options right now? What is open for size? What's your top 10 size VIX options position? Let's find out, listeners. I'll give you a couple of seconds to guess what's the cutoff. What's number 10? And if you guessed 197,000 of the Nove doubles, the Nove 55s, then I'm impressed and a little disturbed. But either way, Nove doubles, nearly 200,000 of those for the number 10 spot this week, listeners. Number 9, by the way, we are still 8-2 calls over puts. So we'll see if we can track down those puts in a little bit. Number 9, 217 of the SEP 80s. So right out of the gate, we're starting hot, listeners. No doubles and SEP 80s. They are not messing about in VIX land this week. Number 8, 218 of the SEP 20s. Now, what's that doing there? That's far too reasonable to be amongst the doubles and the 80s. This is not the place for reasonable paper. Number 7, 231 of the D60s. There we go. Right back at it. Number 6, another reasonable strike here and option is 236 of our first of 2 puts on the docket. It is the September 16 puts. Again, it's 236,000 of those. Number 5, 240. We talked about these a week or 2 ago. These were just open. These are the Feb 47.5. So whoever's been loving up that 47.5 strike pretty much all year long has now extended his love affair all the way out to February. Number 4, 247 of the OC 35s. Number 3, 249 of the SEP 25. So we are in completely weirdo territory for most of these listeners. Number 2, 250,000 almost exactly of the no 47 halves. And the big dog out there in VIX land yet again this week. And you could argue another one of these quote unquote reasonable positions. 301,000 of the September 15 half puts. So interesting stuff. They're looking decent right now. What do we say the cash was at the start? Or not the cash, the SEP future was at about a 15 half. So you're playing a coin flip with those bad boys right now. Something's got to happen between the cash and the SEP future by next week. I guess we'll find out what it is. As we find out what Russell has in store for us, it is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, the song has been played twice. What you got for us?
Yeah. Okay. So not a whole lot until and then today actually is one of the busier Fridays before noon. Usually I just glance at Friday and there's not a whole lot to talk about.
Yeah, something's popping off today. I don't know what's in the.
Yeah, no, it started like I checked mid morning. There wasn't a whole lot there, and then I checked about an hour later, and I was like, wow.
They heard Vol Views was on, so they knew they had to bring.
They wanted to give me something to talk about. Thanks, guys. So Monday with VIX at 1527. This is, I'm going to tell you, I looked at this trade, and I'm going to say it kind of slowly because there's a lot going on here. And I'm like, what the heck are they doing? And then when I ran the numbers to see what their profit range was on it, I was like, oh, okay, that makes sense. So somebody, and we've seen this trade before in the weeklies, targeting expiration. Somebody bought 171 of the September 10th, 16 calls for 29 cents. They sold 171 of the September 10th, 17 calls for 15 cents, and sold 171 of the September 10th, 19 calls for 8 cents. This is a net cost of 6 cents. I'm not 100% sure if it was an entry or an exit. You just couldn't really tell by the open interest. But again, I've seen this trade on Mondays a few times now. But this trade actually would make a profit between if they held it through expiration, and VRO came in at 1606 between 1606 and 1994. With a maximum profit of a settlement between 17 and 19. Now, PPI was that morning. So, you know, I'm trying to come up with a reason that somebody would think that VIX would be higher on Wednesday, and PPI was that morning. So, you know, it might been a reasonable trade. The settlement was well below 16. It was 14.79. So they're out 6 cents on this trade. But really, when I first looked at it, I'm like, this looks just stupid. But then when I charted it out, like, well, that makes a bit of sense as long as we don't get a Volmageddon move between when they put it on Monday and Wednesday's expiration. So not a totally stupid trade, but didn't work. So there. Most of the other trades I saw were bullish, looking for a spike in the next week or two. Maybe just because VIX is so low, they think that we're due for some movement higher. Tuesday with VIX about a little above 15.5. We had a sweet buyer of 2,000 of the September 24th, 25 calls for 40 cents. On Wednesday with VIX at 14.98. This is somebody bought 1,850 of the October 1st 18 puts were between $1.57 and $1.59. The break even on that guy comes to 1641 to 1643 with VIX at 1498. Looks, taking advantage of that big spread, even in the weeklies. On Thursday with VIX right at 15, got somebody who bought 1,700 of, and I did want to point out with that Wednesday trade that the spread was $1.37 by $1.57, and they 20-cent spread and apparently didn't even try to get filled in the middle. On Wednesday, somebody bought 1,850, on Thursday, somebody bought 1,700 of the September 24th 20 calls for 52 cents. The spread was 49 cents by 54 cents. It is possible to get filled in the middle on these things. So even, weeklies do have some liquidity in there, but they look at another one looking for some sort of move higher in volatility. And then today with VIX at 1463, there was a sweep buyer of 1,200 of the September 24th 22 calls at prices between 37 cents and 39 cents. So each day, Wednesday, Thursday, Friday, had buyers of kind of within the same range, or Tuesday, Thursday, and Friday within the same range, just using different strike prices. And then finally, this is normally one of my more favorite trades, but I don't like this one. With the VIX at 1464, somebody did buy 1,000 of the October 1st 15 puts for 16 cents. Now break even is 1484, and if we don't move, they'll make, they'd have a profit of 20 cents off of us. I just would rather have a bit more wiggle room. There's no reason whatsoever that we can't see VIX settlement with a 15 handle. And even if not a whole lot's going on, just from market noise. So I would want to go a higher strike than that. I didn't have the time to dig at the time where the markets were at that time, but I would just something that's got more of a cushion to it. I would choose a higher strike. So I like that trade format, but not necessarily that specific trade. That being said, October 1st settlement will be 12.
You jinxed it now. But we have seen a lot of people. How much money has gone to die on that 15 put strike over the year, right? And most of it has gone the way of the. We've seen a lot of people. Till September was a big one for a while ago. By months, midsummer, a lot of people put a lot of capital towards that 15 strike, and most of it has not come to pass. If you had brief moments, you really had to get in there quick and really monetize them, because sure as hell didn't go out sub 15. So yeah, it's been a struggle. If you've been one of those folks out there, listeners, looking to fade VIX for the better part of the last few months and 6 months really, and not really going your way, you probably feel that pain. But there's other ways you can do it, obviously, than just loading up on the 15 puts. Hopefully you've been listening to this show and you figured a few of those out. A few of those, SVIX comes to mind, a couple others. But I digress. Let's get out there. Like I said, something's popping off out there today, and I was trying to suss it out while Mr. Dr. VIX was talking. Looks like in the last hour or so, what's really ginning it up is we have a pretty sized spread. It's the about 108,000 of the SEP 16 puts going up. Looks like those are probably closing against the 15 half puts, roughly half, 55, 57, thousand of those. That's number 3. Number 2 is actually the 15 half calls, which is also part of this spread, which is kind of funky. If you're just rolling your 16 puts for size, are you going to roll it to a straddle / synthetic on the 15 half strike? That's kind of weird, but we have seen weirder things. Either way, that's your top 3 out there, and those 3 are going to account for about 220,000 contracts. So that's probably why we suddenly shot up a wee bit on the volume front. Number 4 got 45,000 of the SEP 20s. So again, looking less reasonable by the day, but still a reasonable strike, all things considered. Number 5, 33,000 of the SEP 24s. Out to yesterday, like I said, we started out hot. By the time we kicked off option block, we were already north of 500,000. It seemed like we were going to have a banger day, and then VIX kind of just went to die after that, put up like 100-odd thousand contracts the entire rest of the day. Closed at 665, so what started promising ended not so much. The hot option. Now, we talked about these yesterday. In fact, I'll have to dig up really quickly the results of our flash poll about this, because this one certainly resonated, I know, with a lot of you out there. is the Feb 60s. They were dominating the tape yesterday. At the time, they had gone up 30,000 times. They went up a total of about 31,000 times. That was the hot option yesterday in VIX. They went up for 60 cents. We said at that price, are you down for that? Do you want to buy those? Are you saying sold to you, or would you like to sell them, but maybe in a bit of a more risk mitigated fashion, maybe as part of a vertical or a spread? And ended up straight up sellers, 43.8%. You just said sold to you on these bad boys. You want no part of the Feb 60s for 60 cents. 37.5% of you wanted to buy them, and selling them in a more risk mitigated fashion, about 18.8% out there. So you're buying the 30s and selling the 60s or something along those lines out there, listeners. So yeah, the Feb 60s dominating the tape on kind of a weird day. Number 2, 27,000 of the SEP 15 puts. Number 3, 24K of the SEP 20s. Number 4, 21,000 of the SEP 25s. And rounding out the top 5, once again, that strike where good money has gone to die all year. 20,000 of the OC 15 puts. Wednesday, a banger. Our only million handle on the week, 1.16 million. The hot option out there, 94, almost 95,000 of the OC 50s. Followed by number 2, 63,000 of the D60s. So we had some wild paper slinging on Wednesday. Number 3, 61,000 of the SEP 16 puts. Number 4, 60K, and this was part of this vertical, I believe. It was a 60 par vertical. 60,000 of the D's 100 calls. Yes, those were definitely opening. Number 5, 44,000 of the SEP 16. So we were all over the place on an over 1 million contract day. Tuesday, almost exactly the same amount of paper as yesterday. 662 on the tape. The hot option out there, once again, the 15 strike persists. 26,000 of the SEP 15 puts. Number 2, 22,000 of the SEP 16 half puts. Number 3, 21,000 of the no 15 puts. So hey, if it doesn't work by September expiration, buy a couple more months. If you're wondering what's a no 15 put going for, about 23 cents, at least on Tuesday. So there you go, up to you whether you think that's worth it or not. Number 4, 21,000 of the OC 30s. And number 5, OC 18 puts, 17,000 of those going up for about $1.71, listeners. Monday, extremely light, 460 on the tape. The big dog, 19,000 of the SEP 17 puts. Obviously, pretty meaty at that point, $1.31 for those. Number 2, 17,000 of the OC 80s, so right back to the fun. Number 3, 17,000 as well of the SEP 40s. Number 4, 16,000 of the SEP 60s. There was some SEP vertical action on Monday, I believe. And number 5, 16K of the SEP 24s. All right, Mr. Meatball, that's a long way around for a lot of VIX options paper this week, including some very funky stuff. What, if anything, caught your eye in VIX options land this week, sir?
Well, I mean, you're seeing a lot of short-dated stuff. September is still dominating, a lot of volume in September. Today, we've seen some big blocks against the open interest. I'm interested to see if open interest goes up or down in those September options leading into next week. 60,000 of the 16 puts have traded today, 50,000 of the 15.5s. Oh no, that was a conversion. Oh no, it wasn't. It was yes, it was. And then you got some 29,000 SEP 24s, more of the 16 puts trading today. On the day, there's been over 110,000 of the 16 puts trading. Nope, 107,500. Pretty active day for a single strike in VIX, where it's not just one giant trade. But it looks like they got most of it done over a short period of time. Outside of that, I didn't see any huge outlier trades this week outside of Monday. Feb was busy on the 11th. The 60 calls for 60 cents that you were talking about. No thanks. I just don't. I guess if the VIX gets to those will be worth $1.20 if the VIX can get to 35.
Yeah, you don't have to get to 60.
Yeah, you had some October 5th. This is an interesting one. They did the October 50 calls versus the 60 calls in December, the 100 calls in December, and the 23. So it looks like they bought the October 23 50 on a 1/4 ratio And then they bought the 6,100 call spread in December, 60,000 times to kind of clean that up. Weird spread.
Yeah, that was a funky one. That definitely came. Whenever you see the pars slinging in December, it always catches our eye.
There's something going on there. It's probably against something upstairs that they're holding. It's usually what I chalk it up to. Whenever I see that weird stuff, I'm like, there's another piece to this. A trade I kind of do like, and we've talked about this. Somebody bought the Nove 1615 put 1x2, buying 10,000 of the 50 puts of the 16 puts to sell 20,000 of the 15 puts out in November. Looks like they paid 4 cents for that. Pretty decent risk reward. You run into a problem if vol really falls off a shelf. But I don't hate that. That was on the 9th. And then looking at the 8th, the load. You had more of the September trading. The 17 puts. Looks like somebody that was long them already unloaded them and rolled back buying the 19 puts in October. For $2.42. Don't hate that spread, but also a ratio. So kind of a muted week in whole. Like, it's not like volume was like super light, but it just nothing said wow. I felt like every day was kind of like average volume, mostly.
Yeah, we had one spike on Wednesday, but outside of that, and you're right, I don't mind that. I don't hate that either. That 1x2 puts for like 4 cents. That's not a terrible way to go. We were talking for a while. So many different ways to carve up that 15 put strike. That's another way to do it. And I don't. If I have to go one of those ways, I don't mind that one. Because you're right. We have only flirted with that 15 handle. If we get to a 12, you're wearing it. But what are the odds of that, right?
If I could get paid for that, I would like it a lot more.
Yeah, that's what we were talking about last week, Russell, with that other ratio you had in the weekly.
Yeah.
Someone ended up paying a bit for it, and we said we'd like it much better if we could actually get paid for it. That's the ideal way to do one of those, listeners, is of course, because then if nothing comes to pass, you still have a little something to show for it. And but yeah, paying for it, you're right. That was my one caveat. Again, it's only 4 cents, but it's the thought that counts.
Exactly.
Speaking of our thoughts, what are our thoughts on the world of inverse vol? Starting to work again out there, and this was another week, and it's something we were chatting about with our pro members, and I'll get into this later on Options Oddities, actually coming up immediately after this show, listeners. So if you're hanging out in the pro, no rest for the wicked, no waiting for you folks. Options Oddities coming up right after this. If you want to check it out, listeners, theoptionsinsider.com/pro. And the question has been for a while whether or not to overwrite your SVIX. I know a lot of you are rocking some SVIX right now, and it has been working out fairly well, and I'll get to my answer in a little bit, what I was doing. But interesting stuff out there on the SVIX front. Hanging out 21.35, so up nearly half a point net on the week. Of course, we were lower since then, so it has been nearly a full point rally from the nadir earlier this week. Putting up nearly 4,000 contracts, so that's another issue with aggressively overriding your SVIX, is the liquidity still is not there. The ADV is only about 4,800 contracts. I've often joked, sometimes it seems like SVIX options are a roach motel. Sometimes I'll throw a flyer out there on an absolutely ridiculous trade that I should not get filled on. Let's say a funky broken wing fly. Nowhere mid-market or more aggressive. And sometimes they'll fill me, and I'll say, how the hell did I get filled? And then when I go to get out of it the other side, there's no market to be found. So a bit of a roach motel sometimes, listeners. Be careful what you're putting on out there. But fun stuff nonetheless. Mr. Rhoads, you've been riding SVIX. In fact, I think you said on the show last week, your one complaint is that you did not have more SVIX in your back pocket. So what's catching your eye in inverse vol land this week?
Well, yeah, I still wish I had more SVIX. Somebody sold the 22 puts today that expire today, mid-morning for 62 cents, which actually has negative time value on it. And I would assume that they're just trying to bail out of a trade, that they're not selling them to open to take possession of shares, because they could have just bought the shares at a better price than that. But I think that shows how strong that option market is. Somebody also bought, and I guess this is a roundabout way of trying to play a volatility event. Somebody bought 120 of the October 17th 13 puts on SVIX, paid 20 cents for them. Of course, they paid the offer because heaven forbid you try to work something. So somebody's expecting something to happen.
Yeah, you're right. They sold those puts. They sold those puts. They did sell them underwater. That's
Yeah.
that's never ideal. But getting back to the issue with SVIX.
Yeah. No, and when I first looked at it, I was like, oh, well, if they're selling those and they expire today, maybe maybe there's 10 cents of time value, and they're like, hey, we can take possession of the shares, and I look at what a great trader I am, Mr. Portfolio Manager. I saved you 4 cents. Because that's the value of a lot of execution traders. So there.
I know some of our pro members were joking about selling in the money. Hopefully that wasn't one of them, because they should know better than to sell underwater puts and SVIX on the day of expiration. Mr. Meatball, sir, you've been out there fighting the good fight in inverse vol land for a while, rocking the newsletter during some choppy waters in SVIX.
Yeah.
What's catching your eye out there these days?
I mean, the way we calculate like how much what the pressure is on SVIX, my yield zone, as we call it, it's over 21, and anywhere over the 20s tells you that the futures markets are getting really, really bid relative to the cash index, and that's what things look like right now. If the annual, that's a lot. That's a really wide zone here. Let's just put it that way.
So you just straight rocking your SVIX? I know for a while there you said you were
kicking back. I'm overwriting some calls. With things up here. When the zone's that high, you should be collaring or at least selling calls, because when it gets that's almost telling you that futures markets are basically predicting that VIX is going to go up, which they're always kind of doing. But when things get that wide, right, there's always a kind of a normalized spread. But when VIX spreads over VIX cash get way too wide, the futures are almost always right. Stop me if you think I'm telling tales outside of school, Russell, but I just find the variance guys that are trading futures are much smarter than the SPX guys. No offense, SPX people.
They got to step it up on the VIX futures side. VIX futures continue to be completely anemic on the volume front. Nobody wants any VIX futures anymore. It's wild. Just plummeting. I guess zero DTE fills all of that bill for at least the intraday crowd going the zero DTE route, I guess. I don't know. But interesting stuff out there. But you're right. It does start to feel like maybe we're getting a wee bit top heavy in the near term out there. So maybe a decent time to start adding some of those upside overwrites. I won't even talk about Russell's V yield. It's just too boring. No one cares about V yield. We're going to keep moving out to UVIX. 10 and a quarter, down 1.5 points. Putting up 32,000 contracts. That ADV is 39,000 a day now, so pretty close to that. That's up about 1,000. That's still pretty light for UVIX, so hopefully we get a little more paper out there. Of course, once we get shy of a 10 handle, it'll be interesting to see what happens on the volume front. UVXY, again, kind of a weird scenario where they were moving in lockstep for a while. You don't see that very often. They're almost the exact same price level as well. Obviously, you expect UVIX to outpace UVXY in a given scenario, and that's what's happening. UVXY 1060 right now, down about 1.1 points. Putting up a little more paper, though. That's always the argument for UVXY. A little bit more flow out there. 48,000 contracts. ADV 98,000. It's up 3,000. And let's do the trifecta with VXX there as well. 33.5, down almost 2.5 points, about 2 1/3 points. Today they had about 19,000 contracts on the tape coming into the start of the show. Let's see if any more has percolated. And yeah, up to about 30,000 contracts, so they're on their way to their ADV of 46,000, which in and of itself is up about 4,000 from this time. I forgot who wrote in for that 20 handles. I don't know if you were at 20 or just had a 20 handle, in which case, if you're at 29, you're starting to get within spitting distance. You were looking a long way away back when we were north of 40 out here. I forgot what your name was, listener. I apologize. But interesting stuff out there. Mr. Meatball, anything catching your eye in the rest of the vol ETP landscape this week?
Yeah, I mean, with that yield zone so high, these things are falling off a cliff. If Fed goes well, VXX is going to be well below 30, and we're going to start talking about UVIX reverse splitting again. And UVXY for that matter.
It's almost that time. UVIX reverse split conversation. So if past is prologue, we'll start talking about it now, and they'll split in March of next year. It'll take some forever, it seems like. They like to linger around the 3 handle for 6 months for whatever reason. I don't know what's going on out there. Speaking of the Fed, I'll get your thoughts really quickly, Mr. Rhoads, and we have a question from our chat I want to percolate in. But Mr. Rhoads, anything else catching your eye in the rest of the vol ETP landscape this week, sir?
No, let's do whatever. And I'm not looking in the chat, so I'll be surprised by the question.
Yeah, you don't go in there anymore. You're mad that they voted against you in the vol death match.
That's right. No, I'm lazy.
You got burned. But they're just debating what actually happens if we're talking about this 100% probability next week of the Fed cut coming to pass. What happens if they don't cut rates? In the theoretical scenario where Powell says, nope, I'm standing firm, 2 big middle fingers to the White House, not cutting anything. What does the market look like on Wednesday afternoon?
If you think that's going to happen, buy gold. Because the only excuse that Powell can have is that there's inflationary pressures floating around that the rest of us aren't seeing. And I think that's where in anything else that you think would benefit from higher inflation. I'm not saying that's going to happen, but if somebody told me ahead of time that's what he was going to do, that's the first place I'd be looking. I'd be looking at copper, and I would just be looking at hard commodities because the belief would be that that they're seeing something that the rest of us are not seeing.
You'd go there before you sprinkled, let's say, some VIX 20s in your back pocket for a rainy day. You go with the gold route first.
I think that the stock market would just think, okay, we're going to get it 6 weeks from now, and all those odds would get pushed out. So, if they skip this one, it's just a matter of time. It's a matter of just a few weeks before we actually get one. And I don't think the stock market. I don't think volatility would be the place to be.
Interesting. Mr. Meatball, what are your thoughts? We don't get the cut next week. What are we looking at Wednesday afternoon?
Things will roll over pretty hard.
Think so?
Yeah, we'll be talking about the VIX going from 14 to 20 between 20 or higher between Wednesday and Friday.
Yeah, I'm definitely in that camp. I think.
And then by the following Tuesday, it'll be back at 16.
Yeah, we'd get a nice spike, maybe even mid 20s. I think we'd have a nice sell off in the S&P. Someone was talking 30, and I don't know if we get to 30, but I think low to mid 20s definitely off this. I would. It's so baked in now, Russell. It has to. Yeah. It has to just be.
Well, one thing. What's interesting is 3 of the weeklies trades I talked about would be the setups that you would want for what you guys are talking about.
There we go. They're ahead of the curve.
Somebody knows something.
It would basically signal stagflation, is what that would mean, and the Fed's hands are tied. That's kind of them not cutting rates and them saying, we can see the economy weakening a little bit, but inflation is going to continue to go up, and we've got a problem here. We got to pick a lane. That's what that would mean, and it'd be a real problem. If they're kind of hinting at that or worried about that, that's what could roll the rest of this year into a bear market.
Yeah.
Oh, yeah.
That would absolutely destroy the AI boom.
That would be a big bad. That'd be a very bad signal for the market. What about our crystal ball listeners? Is that a bad signal? I guess it's time to find out.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. As we're rolling into the end of the show here, the crystal ball, the market's not looking that dissimilar from where they were to start the show. VIX cash hanging out pretty much exactly 14.5, 1451 still, so not really moving much there. The NASDAQ up about 0.5% or close to it, so ticking up slightly. S&P ticking up slightly as well, up nearly 0.1%, and the Dow off about 0.4%. So almost the exact same spot we were in to start the show, listeners. And last week on the show was myself, and it was the doctorist of VIX. And both of us were feeling a little bit spicier, which not looking great right now. I was the closest, quote unquote. I was only a mere 2 points away at a 1655. Mr. Rhoads was feeling a historically appropriate 1776. You've been all over these lately. 1492, 1776. You've been loving your historical indicators. Unfortunately, listeners, history this week having no bearing on vol. 1492 would have been a heck of a lot closer, at least. That means Mr. Meatball, your palindromic nonsense gets to lead us off this week. Are you going to hit us with a 1331? Would you dare, sir?
I think the Fed's going to play ball, and Powell's not going to be, I don't think he's going to be like ridiculously dovish, but he's going to be dovish enough. We're going to be talking about, when do we get to 6,700 and 6,800? And the VIX is going to be 1331.
Yeah, I already wrote it in before you even said it. I knew you were going to go that way. All right, I guess I was the next closest.
Like Judge Dredd, just for VIX pricing. I knew you'd say that.
I am the law. All right, I'm going to feel a little lighter as well, but I'm not sure. I'm not going to speak a 13 handle into existence. I'm going to say 14 and a quarter, so slightly lower than we are right now. Something's going to manage to keep us above that 14 handle. Maybe a little sentence Powell throws in there, or something else is going to gum up the works, and we will remain above a 14 handle. Mr. Rhoads, are you going back to history? What's calling your name this week, sir?
I don't know. You kind of went to the level I was going again. You keep doing that to me.
I have been stealing your thunder a lot lately.
You did. You went a penny away from something I had written down. I didn't write anything down so you couldn't because your spies couldn't steal from me. I don't know what's going on now that we can see each other on camera while we're talking, but I've got to start hiding stuff that's in the background, I guess. So I'm going to go with 1675.
I'm close to you.
Yeah, I'm trying to give you some room, Mark. I am.
I appreciate it.
Oh, no. Hold on. You said, what did you say? You said 14. I put the wrong handle on it. At 14. So, you know what? I'm going to revamp the whole thing here. I'm going to do 14.99 just to screw with all the 15 put holders.
There you go.
But I wanted to go, same handle as you. I just wanted to go a bit higher.
I was going to say 16. That's quite a leap.
Yeah,
all right. There's our market listeners. Start getting your guesses in. Oh, I see some 14 handles preeking in there in the chat. Get 14 halves. Get your guesses in. If you're the winner chicken dinner, our producers will go through it all. I didn't think we had any 14 halves in this week, but our producers will check. If you send them in after the fact, of course, you too can play along on the home game. Just make sure you get them in by the end of the day today. Otherwise, it's kind of cheating. If you send it in next Friday, it's kind of too easy at that point, listeners. So you got to get them in the same day that we all play. And Mr. Meatball, if folks want to play with some SVIX newsletters, or they want Andrew to flash them in a dark alley, where should they go? What should they do?
You know what? Follow me on Twitter at OptionPit and go to our YouTube page. Just type in Mark Sebastian Option Pit, and you'll find our YouTube page. We're posting, 1 to 2 valuable videos there every day. So check out the Option Pit YouTube page.
Yeah, you've been plugging the tube lately. Check him out on the tubes.
Absolutely.
If you want to see his glorious mug right up close, listeners, see all the pores, see everything. He has his chat show he does with the Undertaker. All sorts of fun stuff. Option Pit on the old tubes, or of course, optionpit.com. to learn more, listeners. And Mr. Rhoads, what you got cooking for the folks, sir?
Oh, nothing dramatic. Same old, just paying attention to what the markets are doing and not putting anything major out in the near future. If something arises, I'll put it on Twitter for sure, and it's just my full name, at Russell Rhoads.
Are we ever going to learn when genius sells, sir?
God, I hope. Yeah, we're getting there.
All right, good. So look forward to that, listeners. In the meantime, give him a follow over there at Russell Rhoads. 2 S's, 2 L's, RHOADS. If you've gone to a Tampa weatherman, you've gone too far. Dial it back one, and you'll find Mr. Rhoads. That's going to do it for us on the VolView side. Not going to do it for us on the pro side. I'll be back in your ear holes instantaneously, listeners. So just chill in the chat for a few minutes, and we'll be back in a little bit. So talking oddities, all that kind of fun. Then we'll be back on demand one final time to wrap up the week. What's going to light up the tape on Thor? Well, I guess you got to tune in to find out. The Hot Options Report, yet another reason why you should be subscribed to the full network. And of course, we're back again on Monday all the way through to next Friday. Another episode. Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.